All right, CoinGecko report. In 3, 2, 1. The crypto market has been a roller coaster lately, and getting a sense of where it's heading next can be hard. Thankfully, there's a simple way we can forecast the future, and that's by looking at what happened in the past. And that's why today we're taking a closer look at what happened in Q3 and what it means for the crypto market in the remainder of Q4. My name is Lewis, and you're watching the Coin Bureau. Before we begin, I'm not a financial advisor, and nothing in this video is financial or investment advice. It's educational content intended to inform you about a recent crypto report. And if you enjoy content like this, prove it by pounding that like button. Now, the report that we'll be summarizing for you today is CoinGecko's Q3 crypto industry report for 2025. We'll just be giving you the juiciest bits right here in this video, but we'll leave a link to the full report in the description. The report starts with an overview of the crypto market, noting that by the end of Q3, crypto's total market cap had grown by more than $560 billion to a total of $4 trillion. But things have changed quite a bit in the short time since the report was published, and most of those gains have largely been wiped out. On October 10th, the crypto market saw $20 billion in liquidations within 24 hours, the largest in crypto history. This rattled investors and sent crypto total market cap tumbling from around 4.3 trillion to just under 3.2 trillion. Yeesh. In any case, the report notes that Bitcoin dominance fell below 57% in Q3, signaling a gradual rotation into altcoins. Although Bitcoin dominance has risen since, it still hasn't risen nearly as much as you'd expect given the recent carnage in the crypto market. Regardless, Ethereum's dominance climbed above 12.5% in Q3, and a handful of other major altcoins, namely XRP, BNB, and Solana, slightly increased their dominance too. However, the market share of others hardly budged, ending Q3 at 13.8%. This could be because we're starting to see more and more capital concentration in the largest cryptos. Whatever the case, the report examines which narratives gain the most attention. Interestingly, the top 20 narratives attracted 53% of user attention, down significantly from 91% in Q2, suggesting that investors are slowly moving out along the risk curve. Or, at least they were. Perhaps unsurprisingly, meme coins topped that list, but even then, they garnered less than 9% of CoinGecko's user attention. Other categories with high investor interest included AI, real-world assets or RWAs, Solana meme coins, the broader Solana ecosystem, and DeFi projects. The report then highlights digital asset treasury companies, or DATs, which have collectively spent over $40 billion on crypto this year, with more than half being scooped up in Q3 alone. To put things into perspective, DATs invested nearly $22.6 billion in crypto Q3, the highest quarterly total yet, with nearly half going into altcoins. And by the way, you can learn more about what DATs are stacking by checking out our latest update right over here. And if you're looking to accumulate crypto yourself, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. All you need to do right now is hit the link in the description or scan this QR code. Once you get on the deals page, you will see all of our offers across a range of exchange partners. Click one of these sign up now buttons and that should take you right to the deal. These deals won't be around forever though, so take advantage of them while you can using the link in the description below or the QR code on the screen. Okay, the next part of the report examines Bitcoin's Q3 performance. BTC surged to a new all-time high of 126K in early October. The rally was driven largely by strong ETF inflows, with average daily trading volume growing by 28% in Q3 after 2 months of decline. The report also looks at Bitcoin's mining hash rate, which soared 35% in Q3 to an all-time high of 1.2 zettahashes per second. This means ASIC miners are spitting out 1.2 sextillion guesses every single second to solve the network's complicated math puzzle in order to process transactions and earn the block reward. Besides the increasing hash rate, there have been a number of other developments in Bitcoin mining in Q3. CoinShares Bitcoin mining ETF posted an impressive return of 94%, driven largely by the mining sector's shift towards AI. Elsewhere, Jack Dorsey's Block revealed a modular mining product with replaceable parts to reduce costs. Google backed TeraWulf and Cypher Mining's leasing deals with AI firms in exchange for equity, while AI cloud computing company CoreWeave announced a $9 billion merger to acquire crypto mining firm Core Scientific. The report then highlights that while Bitcoin outperformed every major asset class in Q2, it underperformed in Q3. Specifically, BTC gained 6% compared with 8% for the S&P 500 and 12% for the Nasdaq. Meanwhile, gold rallied around 16%, driven by accumulation by central banks and geopolitical uncertainty. As for the spot Bitcoin ETFs, their net inflows decreased from $12.8 billion in Q2 to $8.8 billion in Q3, a decline of almost 30%. Of the top 11 ETFs, only 3 recorded net outflows. What's nuts, though, is that over 97% of total inflows went to BlackRock's IBIT, although its spot Bitcoin ETF market share stood at just over 52% by the end of Q3. Now, the next part of the report pertains to altcoins, specifically Ethereum, BNB, and Solana. ETH nearly hit a new all-time high of $5,000 in August before pulling back to $4,000, and it was on track to set a record again before the market dipped in mid-October. So close, yet so far. Anyhow, ETH still closed Q3 at $4,215, up over 68% for the quarter, outperforming major cryptos like BTC, Sol, and XRP. Daily trading volumes for ETH jumped from 19 billion in Q2 to 33 billion in Q3, driven by Ethereum treasury firms such as SharpLink Gaming and BitMine, along with strong net inflows into the spot Ethereum ETFs. Regarding transaction activity across the EVM ecosystem, daily transactions on the top 21 EVM chains averaged 55 million in Q3, up from 41 million in Q2. BNB chain led with nearly 19% of all activity, while the top 3 EVM chains for transactions, BNB, Base, and Tron, accounted for 51% of total EVM transactions. Another EVM chain that gained traction in Q3 was Plasma, which launched in September and quickly captured 9% of all EVM transaction activity. Not a bad start. The report then looks at the launchpads on Base, specifically Zora, which accounted for 96% of token launches on Base. Zora has exploded in popularity ever since Coinbase rebranded its wallet app to simply Base, integrating Zora in the process. The result is that new token launches on Zora have exploded from about 9,000 in Q2 to over 30,000 in Q3, significantly reshaping the meme coin landscape. In August, Base briefly surpassed Solana in new token launches, positioning Base as a solid rival to Solana's meme coin ecosystem, and establishing Zora as a strong competitor to Pump.Fun. Yep, just what we need. More meme coins. Anyway, the report then pivots back to the spot Ethereum ETFs, which had a record Q3 with 9.6 billion in net inflows, their highest ever, marking the first time that they've ever surpassed the spot Bitcoin ETFs. Unsurprisingly, BlackRock's ETH-A vacuumed up most of the inflows at 7.9 billion. The report then pivots back to BNB, which surged to a new all-time high of $1,048 in Q3, fueled by PancakeSwap's integration with Binance Alpha, which is a hub for early-stage BNB projects, and growing momentum from Aster, a perpetual DEX. Oh, and by the way, you can learn more about Aster in our recent video about that right over here. Solana is next in the spotlight, and it's more of a mixed bag. Sol rallied in July as treasury firms like Apexi and DeFi Development Corp increased their holdings of it. It reached a quarterly high of 248, supported by optimism around the upcoming Alpenglow upgrade and a stress test that achieved 100,000 transactions per second. However, BTC's pullback in late September dragged many cryptos down with it, including Sol. Combine this with the recent government shutdown and delays in approving spot Solana ETFs, a good chunk of Sol's gains have since been erased. When it comes to Solana's launchpads, the number of them has grown since Q1 2024. However, token launches have fallen sharply from roughly 56,000 in January to just 26,000 in September, less than half. At the start of the year, 99% of tokens were launched on Pump.Fun before competitors gained traction, most notably Let's Bonk, which captured 74% of the market at its peak, leaving Pump.Fun at just 13%. This trend has very much reversed since. Let's Bonk's share fell to 10%, while Pump.Fun rebounded to 86% in Q3. Now, the next part of the report examines the impressive growth of DeFi in Q3. This growth was partially fueled by ETH's rally and partially fueled by the stablecoin narrative after the Genius Act passed in July. The DeFi sector's total market cap soared to an impressive $181 billion by late September, boosted by newly launched governance tokens like Avantis AVNT and Aster. As a result, DeFi's share of the broader crypto market rose from 3.3% to 4%. The report notes that lending and liquid staking protocols accounted for 42% of DeFi's TVL, growing 55% and 67% respectively since Q2. Elsewhere, tokenized stocks and collectibles surged in popularity, raising the RWA sector's TVL to $15.9 billion in Q3, up 25% from $12.7 billion in Q2. Meanwhile, basis trading protocols, which underpin several major stablecoins, saw their TVL jump nearly 150% to over $20 billion, driven largely by Athena's USDE, whose market cap grew by more than $9 billion. In terms of cross-chain liquidity, TVL across the top 12 bridges grew nearly 40%, from $40 billion in Q2 to over $55 billion in Q3. This was driven by stablecoin flows, new stablecoin networks like Plasma, and perpetual DEXs, most notably Aster, whose bridge liquidity gained an insane 12,000% since Q2. Rising demand for USDT0, Plasma's native omni-chain stablecoin, helped Plasma become the third largest bridge by TVL, as users sought to earn XPL rewards. The result was that USDT0's liquidity jumped nearly 500% in Q3 to $7.6 billion. Meanwhile, Hyperliquid and its Hype EVM drew serious capital, with its bridge's underlying assets rising 58% to $5.6 billion by the end of Q3. Its main tokenization protocol, Unit, also saw its TVL surge over 200%, driven by higher trading volumes and expanded support for non-native assets like BTC, ETH, Sol, and Pump. On that note, the report also examined the tokenized stocks sector, whose collective market cap has grown over 83x since launching in late June. The trend began with Backed Finance's X stocks, tokens backed one-to-one by real stocks, unlike synthetic stocks, which only track the price action of the stocks that they represent. The market cap of X stocks rose from 4.5 million to nearly 80 million in Q3, while Ondo's tokenized assets and global markets platform added another 300 million to the sector. Daily trading volumes averaged at around 80 million, rising to 120 million on weekdays, falling to 30 million on weekends, reflecting the equities market's trading hours. The report also looked at NFT trading, which rose 56% in Q3 across the top 12 chains. Following a sharp decline in Q2, monthly NFT volumes rebounded 41% to 428 million in Q3. Ethereum NFT volumes doubled from 99 million to 197 million, led by blue-chip collections like CryptoPunks, Moonbirds, and Pudgy Penguins. Conversely, NFT volumes on Bitcoin and Polygon fell about 46%. Notably, NFTs on Base surged by 177%, largely driven by the AI-based DX Terminal collection and growing interest in social fi apps like Banker, Farcaster, and, of course, Zora. NFT sales across marketplaces rose 78%, with Collector Crypt and Figtails joining the top three. Monthly NFT volumes across the top 10 marketplaces grew 89% to 488 million in Q3, although OKX and Magic Eden saw declines of 27% and 34% respectively, as Bitcoin NFTs lost traction. OpenSea remained the top NFT marketplace, with Q3 trading volumes up 136% to to $487 million. This was driven by the public launch of OS2 and a free sharing rewards campaign ahead of its native SEA token launch. The renewed interest in blue-chip NFTs also drove lending volumes up 148%, with loan and repayment values rising 85% from $40 million in June to $73 million in September. Blend controlled around 82% of the NFT lending market, though other lending platforms like NFTFi and Arcade also saw notable increases. Now, the final part of the report looks at trading volumes across exchanges. Spot trading on the top 10 centralized exchanges increased by 31%, from 3.9 trillion to 5.1 trillion. Binance maintained the top spot, dominating 40% of the market. Meanwhile, Bybit's market share grew by 38%, pushing it from 6th place to 3rd place. Upbit was the largest gainer, though, increasing its trading volume by 40%, pushing it to the number 9 spot. Surprisingly, although Coinbase's trading volumes grew by 23%, it was outpaced by other exchanges, pushing it down to 10th place. Regardless, CEXes outpaced DEXs in Q3, with DEX volumes rising just 10% to 963 billion. Uniswap regained 44% of the market share, matching PancakeSwap, whose trading volume slightly declined. However, notable standouts were Fluid, which grew 10x, and of course Hyperliquid, which more than tripled its trading volumes. BNB Chain remained the leader with 25% of all DEX trading volumes, despite a slight decline since Q2. This slight decline allowed Ethereum, Solana, and Base to regain market share, with Ethereum nearly doubling its DEX volumes from 126 billion to 235 billion. Hyperliquid also entered the top 10, growing from 5 billion to 16 billion in trading volume. Among the top 10 perpetual CEXes, trading volumes increased by 24%, from 19 trillion to 24 trillion, a new all-time high. The report notes that aside from BNB, trading volumes on perp CEXes fizzled out as the altcoin rally lost momentum in September. As for the top 10 perpetual DEXs, they recorded 1.8 trillion in Q3 trading volumes, an 87% increase from Q2 and another all-time high. Notably, this excludes Aster, which alone reported 84 billion in daily volume. Hyperliquid held the number 1 spot for perp DEXs, but today faces competition from Aster, Lighter, and EdgeX, driven largely by their incentive programs that have drawn in more capital. And with that, we've reached the end of the report. And I'll remind you that you could find the full thing in the description below. For now, though, you're probably wondering what all of this means for the crypto market in Q4. Well, call us crazy, but this report should serve as a massive dose of hopium, given recent events. While many of us have been watching our altcoin bags bleed, it's clear that we're slowly seeing signs of rotation from Bitcoin into altcoins. Even with the unprecedented liquidations that we saw earlier this month, Bitcoin dominance remains in a long-term downtrend, suggesting that it could continue heading lower sooner than later. Another positive sign is that spot Ethereum ETFs outpaced Bitcoin ETFs in Q3 inflows, signaling rising institutional interest in altcoins, with ETH being the logical first step. Combined with ETH's continued strength against BTC and strong EVM chains performance, especially Base, ETH looks set to explode in the coming weeks, likely lifting other altcoins with it. And we also couldn't help but notice a major resurgence in NFTs. It's no secret that NFTs haven't exactly matched their 2021 hype, but the renewed momentum suggests the market could be gearing up for some big moves, and is likewise indicative of more speculative animal spirits. On top of this, crypto trading volumes are rising across the board, indicating momentum is building. After all, the bigger the volume, the stronger the trend. Of course, the catch is that the recent record liquidation event has rattled the confidence of investors pretty much everywhere. Put simply, the market needs a strong bullish catalyst to bounce back, and fortunately, a few may be on the horizon. On the macro front, we have continued easing from the Federal Reserve, with Fed Chairman Jerome Powell recently signaling that QT will soon be coming to an end. There's also the possibility that Trump's tariffs will be thrown out by the Supreme Court in the coming weeks, which would be another bullish tailwind for the markets. And if we're lucky, we might even see a ceasefire between Russia and Ukraine now that oil prices have fallen sharply, putting significant economic pressure on Russia to stop its assault. On the crypto front, we have the pending spot altcoin ETFs, which are likely to be approved by the SEC as soon as the current government shutdown ends, maybe even by the time that you see this video. We also have the SEC's exemptive relief order, which is expected to be implemented by the end of this year. This would basically legalize on-chain activity in crypto for a limited time, and it would result in a lot of innovation and speculation. Finally, we have the Clarity Act, which will provide clear regulations for everything in crypto outside of stablecoins. Hopefully, the Clarity Act will pass in Q4, and if it does, it should likewise take the crypto market higher. In sum, then, there are at least half a dozen macro and crypto catalysts coming up that could take the crypto market higher, and will likely be particularly bullish for altcoins. And let's hope so, because for anyone who isn't all in on Bitcoin, this has been one hell of a painful cycle. And if you want to see when we think altcoins could finally explode, well, check out that video right over here. Thank you all so much for watching, and we'll see you in the next one. It's Lewis, over and out.